George Soros is a legend in the world of investment management. When he moves money, the markets react. When he speaks, the world listens. He's also made an impact through a network of foundations dedicated to global economic and political improvements. He is the chairman of Soros Fund Management and the author of The Crisis of Global Capitalism, Open Society Endangered. I am pleased to have him on this program for a continuation of a series of conferences we've had since I've been doing this program about the nature of the economy, capitalism, and how he sees the future. Welcome back.
Nice to be here.
Tell me about how, the origin of the book, because you have before laid out for me and others your own philosophical base in an open society.
Right.
Start with me by talking about the open society, in a sense, as a foundation, and where you have gone in your concerns about the economic crisis we face as we speak.
Well, I started out with a framework that I really developed as a student when I was influenced by Karl Popper,
right.
Open Society and Its Enemies, the totalitarian systems that impose themselves on the people by force in order to get their ideology accepted. And he counterposed to that the concept of an open society where it is recognized that nobody has a monopoly of the truth, that all views that we may be wrong, and therefore we need a government that we are ready to replace, a democratic government, a market economy, critical thinking. So that was my concept of open and closed society. And of course, coming from Hungary, where I lived through the Nazi regime and the communist regime, I was obviously in favor of open society. And I set up a foundation to foster open societies. Our goal was to help open up closed societies, make open societies more viable, because open societies have deficiencies as well, and foster a critical mode of thinking. Then, as the communist regime started to collapse, I got sucked into a revolutionary transition, and I ended up setting up foundations in some 30 countries. And they did a lot of good, I think, just by empowering people who had a concept of an open society to move towards it. I don't have a definition of what an open society is. An open society has to define itself. So I let the people in the countries define themselves. And then this framework didn't really work quite as I expected, because the collapse of a closed society did not lead to the creation of an open society. There was something missing. And I began to realize that open society is threatened not only by a totalitarian regime, but also by an excessive reliance on market values, that there has to be something else to hold a society together.
What caused you to come to the conclusion that there was serious danger, in, quote, runaway capitalism? Was it the economic crisis that you saw spring out of Asia and then spread to Russia and then threaten Latin America?
No, because I started writing about it. I wrote an article in Atlantic Monthly in beginning of '97. And I started writing the book when I got a lot of reaction to that article, and the article was actually widely misunderstood because of the title, Capitalist Threat.
Right.
So I'm not opposed to capitalism. I want to improve it to make it more viable. So open society is sort of a middle ground, which is neither this what I call market fundamentalism, nor let's say communism or socialism or nationalism. It's the recognition that all our systems are are flawed. All our concepts are flawed, then we must remain open to improvement. There is an excessive belief now in the role of markets, and it's been carried to an extreme which I think endangers our society. It endangers it because, first of all, markets, particularly financial markets, are unstable.
But that's the central core of what you fear about markets, is the instability of the financial market.
Right. Well, that is something that I know about, and I'm on pretty firm ground.
Right.
So there I have, I think, a pretty strong...
And used to your advantage.
Yes. I mean, that's my profession.
Exactly.
So I think there I feel on firm grounds. But I'm also concerned about the relationship between market values and, let's say, human values or intrinsic values. And there's something, I think, wrong if you allow market values to enter into spheres of our society where it doesn't properly belong.
Well, you once said you'd rather be known as someone who's contributed something to philosophy than someone who had contributed nothing but the making of a lot of money.
Right,
and building up your own
that's
economic resources.
Yes, yes.
Staying with this idea of where you began to realize that capitalism had peril within it.
Yes.
Unstable markets and the like. That came before the global economic crisis that we still witness.
Very much so, yes.
Why then, though? I mean, what was it that said to you before everybody else thought things could go wrong?
Because I have a theory of markets which is, let's say, different from the prevailing wisdom. Because prevailing wisdom is that markets tend towards equilibrium, which is true when markets deal with known quantities. But financial markets deal with not only unknown quantities, but actually unknowable quantities, because the quantities that it deals with, namely the future values, depend on how financial markets appraise them at present. Mm-hmm. So what financial markets do today has an impact on the economy tomorrow. So the concept of equilibrium is really not appropriate. I use the concept of reflexivity, which recognizes that there is this two-way connection, that markets don't just reflect, they also affect. And that doesn't necessarily lead to equilibrium. In fact, it can lead you quite far from equilibrium.
Let me talk about the ideas that you raised here and you began to think about before the economic crisis, but move ahead to the economic crisis. How did capitalism and unstable markets contribute to play a part in the economic crisis that we've seen sweep, as I said, from Asia to Russia to Latin America?
Well, you had a variety of factors at play, and different factors affected different countries. But none of the factors was present in all the countries. What was present was the free flow of capital, which is inherently unstable and tends towards boom-bust, so that the bust was preceded by a tremendous boom. And since markets are unstable, we do have monetary authorities that try to preserve stability. And we have central banks in each country and so on. We also have the International Monetary Fund and the regulatory system that applies actually exacerbated the problem.
The regulatory system?
The intervention by the International Monetary Fund and the monetary authorities.
What does this crisis say to you needs to be done? What does the threat that you saw from capitalism cause to be done? In other words, said better, what should we do and what's your solution?
We need to recognize how the system works and reshape the mechanism for controlling the excesses. I think that the mission of the International Monetary Fund has to be reconsidered. We need something like a new Bretton Woods for a world which is characterized by the free flow of capital, because the Bretton Woods was designed for a very different world. Now, before we have such a new Bretton Woods, we actually have to come to terms with the situation and develop some concept as to what the new system should look like, and that's what I try to do in the book. But I will be the first one to admit that I would say that I'm stronger on the analysis than I am on the solution.
Okay, but how do you dampen the flow of capital that rushes crazily towards economic opportunity?
Well, what I have in mind is that when the flow of capital is turned off, then there is not enough. If you then provide some official guarantees which allow the countries in need to access the market, then by withdrawing that support, you give a signal to the market that it is getting overheated. So it's by injecting money when it's not available, then you have something to withdraw, which then gives a signal that things are getting overheated. And then if there is a bust, you then demand or allow the countries concerned to impose conditions on the lenders, as well as having to undergo some severe restrictions themselves. So you spread the burden of the adjustment between lenders and borrowers. This is incidentally what really should have been done in this crisis, because some countries have overborrowed. They had too much debt and not enough equity. For instance, Korea or Thailand. Now, actually lending them more money can't get you out of the trouble. You need to change the relationship of equity and debt. So you really would have had to have some kind of a moratorium and some debt equity reorganization. It is happening now. Let's say Korea has just moved in that direction, but it's 1 year after the crisis, and so in the meantime the economy has plunged into severe recession. I think an earlier move would have abated this problem.
World Bank has been critical of the IMF. You share that criticism?
Yes, I think, but I also have first of all, a lot of respect for the IMF and a lot of understanding for their position, because their mission is, their first task is to preserve the financial system. So they want to make sure that the debtor countries can meet their obligations. Sure. Because if they defaulted, as in the end Russia did, it can disrupt the whole system. So since that is their concern, they want to stabilize the currency, because if the currency falls too much, then the debt denominated in dollars becomes overwhelming. And they want to actually have the country go into a recession so that it has a trade surplus, which allows it to pay the debt. So they are confined by their mission. They do the right thing, but the effect is they raise interest rates to a punitive level, which then has a very negative effect on the economy. Whereas what, for instance, the Federal Reserve has done when the crisis looked like it was beginning to impinge on our markets,
lowered interest rates.
Immediately lowered interest rates, and lo and behold, we seem to be breathing easier.
Do you believe that today, as we speak, before Christmas 1998, that the crisis is under control and the worst is behind us?
I think that the panic phase is behind us. In other words, this wrecking ball that traveled around the world.
The notion that it would somehow overwhelm us like a tidal wave.
Right.
That has been calmed.
That, I think, has definitely been calmed. What we are now suffering from is the after effects the effect of the financial markets on the real economies. So you have a third of the world in severe recession. You'll probably have some more because Brazil has yet to enter into a recession.
But is certain to?
Brazil.
Yes, but is likely to.
It's destined to because the program calls for it.
Right. What do you mean the program calls for it?
The IMF program calls for it. I mean, even the government because this is actually a program designed by the government, the Brazilian government. So you have already that, and you have generally a deflationary environment in the world today because there's overcapacity. Demand is, of course, at a low level, and companies have to sell in order to generate positive cash flow in order to pay their debt. So now there's very little pricing power. Profits are under pressure. Investment demand is liable to decline since there is overcapacity. So it is possible, although less likely today than it was 2 months ago, that the whole world economy slips into a recession.
Let me come to the issue of where is a recession coming to the United States in your judgment?
There will be a slowdown in the growth. Whether we go into a recession, I think, depends a great deal on what the market does, actually. If you had a significant decline in the market, the stock market, it's likely to create a recession because our consumption now has become very much dependent on the capital gains that people make in the stock market. So instead of markets reflecting, economic conditions, they are causing it. So having lowered interest rates, maybe the market won't go down very much, in which case we may have a slowdown without a recession.
Can you have a slowdown in the economic growth of a country and at the same time have its markets keep going up?
Yes, I think
because it is something healthy about keeping the economic growth under control, or in a sense.
Well, when you have less demand for money for investments, but you have an easing of the supply of money, then a lot of that money finds its way into the stock market, which leads to increase in the value of stocks. Might be excessive speculation in certain areas, which then you'll have to pay for later. But in the meantime, I think it's more likely to push prices up than down.
And so you think the market is going to do what?
Well, I personally think this is really just a sort of a balanced judgment, which I'm ready to revise as events unfold. I think we are in a bear market actually, because of the pressure on margins and let's say the decline in investments that I expect to come.
So therefore, if you were an investor, large or small, you ought to either sell short or get out of the market and find other avenues to invest your money.
I wouldn't like to go that far, because actually in the final phases of a bull market, sometimes the biggest profits are made.
In the final phases of a bull market, yeah. And people who leave too early find themselves in great remorse later.
Right.
Have you, final question, have you yet done what you most want to be remembered for? Apart from family, have you done with your personal life, have you achieved yet what you most want to be remembered for?
I think so, and I think the book has a lot to do with it, because I actually want, this is the book I always wanted to write, and have it actually read. So I think I got there. Now, it's not the end of the road. because, as I said, I think I'm better on the analysis than I am on the solution. So I think I'll have to keep on working on trying to refine the solution.
The crisis of global capitalism, George Soros. It's a pleasure to have you, as always. Thank you, George.
Thank you.
Thank you for joining us. See you next time.